Hi, dear listeners. Welcome to this new episode of my podcast, A Digital Tomorrow. I'm joined today by Dr. Dalal Aassouli, Assistant Professor of Islamic and Sustainable Finance at Hamad bin Khalifa University in Qatar, as well as Board Director at the Global Impact FinTech Forum, GIFT. Dalal and I are going to deal with or discuss some interesting topics related to Islamic finance and sustainable Islamic finance. So without further ado, Dr. Dalal, welcome to my episode, and thank you very much for accepting my invitation.
Thank you, Dr. Oriol. Pleasure being with you on this podcast.
Well, the pleasure is absolutely mine, and I think we need to start maybe from the very beginning. So if you could please share a little bit about your personal journey with my audience so they can get to know you a bit more.
Yes, sure. So I'm currently working at Hamad bin Khalifa University in Qatar, which is part of Qatar Foundation, teaching mainly Islamic and sustainable finance. I come originally from an industry background, working in the financial industry in Europe and Southeast Asia, and also currently working on a number of projects on sustainable finance, food security, fintech, as well as Islamic finance in general.
Well, thank you very much for sharing. And well, given that you are working on both Islamic finance and sustainable finance, um, I wanted to ask you a bit about that. Now, we all know that Islamic finance and sustainable finance or investing have a lot in common because they share, we could say, a fundamental principle, which is the avoidance of harm, aside from many other principles. So I wanted to ask you about that. What is Islamic sustainable finance actually? How do you merge Islamic finance with sustainable finance?
Okay, that's a very good question because a lot of the discussions now globally are focusing on sustainability, but also we saw growing interest about Islamic finance, and that since the 2007-2008 subprime crisis, and subsequently with the global mobilization for the implementation of the SDG agenda and the climate agreement, the Paris Agreement on climate change mitigation. So that requires, in a way, mobilization of resources globally, particularly attracting the private sector. So we could say that Islamic finance theoretically is a sustainable finance. So when we talk about broadly sustainable finance, is actually the process of taking environmental, social, and governance objectives into account when making investment decisions in the financial sector. So that is the broad definition, and the objective is to achieve more long-term impact and promote sustainable economic activities and projects. While environmental factors obviously would include climate change mitigation, reducing greenhouse gas emissions, which is the main focus in various initiatives, and also additional social objectives that look into human and animal rights, consumer protection, diverse hiring practices when it comes to governance objectives, for example. So when we talk about Islamic finance, which is naturally an ethical and inclusive and socially responsible finance, because it connects financial sector with real economy and promotes other principles like real economy, linked to the real economy, risk sharing, partnership style financing, and also social responsibility, it is actually a form of sustainable finance. Now, aligning both together would, in a way, emphasize on two or strengthen two key dimensions, which is number one, transparency, and number two, impact assessment. And the objective is to target a wider investor base of impact investors who align actually their financial objectives with social and environmental impact. So to do this, you need more transparency on how money is allocated to what type of projects and how these environmental and social objectives are achieved. And that's why we see globally the development of sustainable finance taxonomies, impact assessment frameworks, a number of KPIs and indicators to support institutions actually reporting on the achievement of social and environmental objectives and sustainability, broadly speaking?
Well, thank you for sharing. Actually, one of the things that has fascinated me the most about Islamic finance for long has been these ideas that you just mentioned. Islamic finance is much more than Sharia compliant finance. I mean, Islamic finance is as well um, ethical finance, sustainable finance. It's all included in one. So I think that's what makes Islamic finance so interesting. I think even leaving aside the religious perspective, I think that in general, just if you look at the purity of finance, I think that this is a very interesting area. This is why I've been trying to do some research in this area for these past few years on how blockchain can be applied in Islamic finance and this kind of topics, because I think it's indeed a very fascinating area. And you just prove now how Islamic finance and sustainable finance can be merged because they are actually not that different in many ways. And I wanted to ask you now about the sustainable development goals. How do you think that Islamic finance contributes to achieving those sustainable development goals?
Okay, that's a very interesting question, and I think the way to look at it is you have obviously, if you look at the segments of the Islamic financial industry, so you have the Islamic banking segment, which is the largest one, followed by the Sukuk segment, which is the equivalent of the bond market, and then you have the Islamic funds. And of course, the takaful, which is the equivalent of the conventional insurance. However, there is a very interesting and sometimes less developed, perhaps I would say, segment, which is Islamic social finance. And this is perhaps where a lot of innovation when it comes to sustainability, but also leveraging on digitalization can be developed forward. And we see some of the very good initiatives, for example, coming from Southeast Asia in this regard. And now all segments can contribute to the achievement of this SDGs. So we have the 17 SDGs, and under them, there are about 169 targets. And obviously, the implementation of the SDG agenda varies between countries depending on the sustainable development challenges each country would have. So examples that we have seen, for example, in the banking segment, promoting financing mechanisms that support transition to clean energy, either targeting retail customers or corporates, also financing projects for the government, when it comes to renewable energy, energy efficiency, waste management, etc. When it comes to the capital markets, we see more and more innovation, typically in the Sukuk market. And recently we saw the development. I think the market started in 2017 when it comes to green Sukuk, for example, from Malaysia, but that has expanded to other countries. And we're talking now about sustainable Sukuk as well. One of the leading institutions also in this area is the Islamic Development Bank, which is one of the key multilaterals globally. And the idea is to mobilize financing through the capital markets to achieve sustainable development objectives. So funds could be allocated, some of the issuances targeted either clean energy, education, for example, and there is potential for many other sectors like health. We've seen how, for example, access to healthcare has been a challenge in many countries during the pandemic. Now, there are other challenges with regards to food security, with the global challenges due to the Russia-Ukraine war. And then we have also the challenges coming from the pandemic. Recently, the humanitarian situation, in Syria and Turkey, there are a lot of mechanisms that could be developed through Islamic social finance mechanism, which are broadly the institutions of zakat, almsgiving, waqf, endowments, as well as Islamic microfinance. And these segments target specifically the bottom of the pyramid populations who lack access, let's say, to basic safety nets such as education, food, appropriate health systems, as well as other basic needs. So these institutions or these financing mechanisms are at the heart of the Islamic economic system, And the ideas and objectives is to promote, let's say, social justice, solidarity, brotherhood, mutuality, whereas other mechanisms like Islamic microfinance would actually enable small businesses who cannot have access to traditional financing modes to access financing for smaller projects, and that is to reduce reliance on charity. These institutions could also perfectly focus on other sustainable development objectives like climate change mitigation. And we've seen that through some of the initiatives targeting, for example, small farmers, whereby you actually achieve social impact as well as environmental impact by, let's say, providing sustainable solutions for, let's say, sustainable agriculture, smart irrigation, access to, for example, financing for small businesses as well, women empowerment projects, etc.
Mm-hmm. And out of all these areas that you mentioned now, which are the ones that you think can allow Islamic finance to maximize more its contribution to development? Do you think it would be more in the sukuk area, zakat, takaful? Is there like any of these in particular that you think might be more useful than the other on like this goal of promoting development sustainability, or do you think that all of them play an equal role?
That's interesting, actually. So if we look at, as I mentioned, the current breakdown of the industry, so the Islamic banking segment is still the largest, and of course the sukuk market. But to what extent their contribution to sustainable development implementation can be actually is considered effective or not? We have seen some initiatives in this regard because, as you know, now there is more and more pressure on financial institutions to integrate and report on sustainability. And that is also enforced through regulations in some countries. We have seen the recent EU plan, and we see potentially that this could also be expanded to other countries, including to, for example, the OIC region, where most of the Islamic finance jurisdictions are located. But also through the Islamic social finance sector that I mentioned, which is perhaps has more impact, potential impact when it comes to social impact. And that is the redistribution of wealth in a more sustainable way, but also that targets additional objectives that promote sustainability, such as climate change mitigation. Now, what we see, some of the strategies, I think there is potential also to create synergies between all of these segments. So, for example, we talk now about blended finance, which is one of the key area that is used, for example, in project finance. And the idea is that you blend a couple of instruments together to create impact. So this is something that usually multilaterals would also be using, aligning, for example, financing through, let's say, multilaterals, government financing from financial institutions, but also targeting, let's say, social finance institutions like microfinance institutions, or even including some of the institutions like zakat, awqaf, etc. So this, I think, the potential for using, aligning all of these instruments and promoting synergies between them is that you actually achieve better impact. And if you add to that some of this is key sustainability consideration, which is transparency and impact assessment, then you also ensure that you target a wider investor base of both Islamic and impact investors.
Mm-hmm. And I know we covered this a bit before, but I wanted to ask you, first of all, whether it is true that the principles of Islamic finance certainly look a bit or a lot like the principles of responsible investing or ESG investing, first of all. And secondly, I wanted to ask you as well, what role do you think that ESG investing can have in the future of climate transition?
Okay, so that's a very good way to address, the broader landscape, or to talk about sustainable investing. So number one, there is sometimes a confusion between the terminologies. So what do we mean by sustainable investing or impact investing, etc.? So effectively, there are few terminologies that can be used, and sometimes they are interchangeably used in the literature, or sometimes they have some differences when we talk about, let's say, what are the similarities between impact investing and then Islamic investing, etc. So I can say that all of these would fall under the umbrella of what we call sustainable and responsible investing. And that include a variety of strategies, which start from one of the prominent or widely used strategies is what we call the negative screening strategy or exclusionary screening strategy, which means that we use some sector-based screening to exclude what we call non-ethical sectors, for example, that have to do with, let's say, arms, or let's say in some taxonomies, like from Islamic perspective, alcohol, or looking into some of like arms or pornography, etc. So all of these sectors are considered unethical, and therefore they are excluded. So the other strategies would include, and this of course would include also sometimes what we call norm-based screening, in the sense that you look at some international guidelines and norms to decide on what can be excluded or included according to their compliance with international standards and norms. So, which involves screening the investments based on a combination of certain norms, covering also ESG factors. And some of them would be examples like international norms defined by international bodies, such as the United Nations. Now, the other strategies would include integration of ESG goals. And we've seen, for example, some of the funds would be using sustainability-themed investments that say focus mainly on renewable energy projects or on education or on health, etc. And then we have what we call impact community investing. And finally, corporate engagement and shareholder action. So these are broadly the key strategies that if we were to categorize the various strategies that fall under what we call sustainable, responsible, and impact investing, or SRI. And each of them are used, using different methodologies and all. And some of the regions are very known for certain strategies as compared to others. Now, Islamic finance most of the times is classified under what we call the negative or exclusionary screening strategy, because when we talk about Islamic investing, there are two levels of screening. There's what we call the qualitative screening, and that's the exclusion of certain sectors and activities that are considered unethical from an Islamic perspective. And then we have the second level, which is the quantitative screening, which has to do with additional, for example, ratios to assess the level, let's say, of leverage, or if there is any income that is considered non-Sharia compliant, and how much does it represent as compared to, the total, for example, revenues of the company. So this is pretty much the landscape. So there are similarities between the negative exclusionary screening between sustainable, responsible investing and then Islamic finance, because we see similarities in terms of the activities that are excluded and considered unethical from both perspectives. And now we see also some alignment when it comes to the other strategies, like the integration of ESG goals, some of the sustainability-themed investments, and also when it comes to impact community investment, because as we mentioned, due to this global mobilization for sustainability and also climate change mitigation, we see more and more Islamic funds also adopting some of these SRI strategies.
Mm-hmm. Thank you very much for sharing all that. And I want to ask you now about how do you think that emerging economies can innovate to develop resilient, climate-responsive capital markets?
Okay, Among the developments we have seen, or the innovations we have seen in recent years, is the development of what we call green sukuk. And of course, if we talk about emerging markets in general, they're both green bonds and green sukuk as well. But the difference when it comes to green sukuk, the advantage is that you're targeting a wider investor base comprising both Islamic and impact investors. Whereas in the case of green bonds, you can only target impact investors because it is interest-based. So therefore, you're not capturing all the Islamic investors market. Now, what green sukuk would allow you to do is that you can target mainly environmental projects, environmental impact projects. So most of the green sukuk issuances now have been focusing on clean energy and energy efficiency projects. So we do need more innovation to address the other basic environmental issues. So we have, for example, waste management. If we talk about specifically the MENA region, that we have the issue of water scarcity, so we do need projects in this area as well. Biodiversity, there are a lot of discussions now globally of biodiversity, preservation. When it comes to the oceans, now we have a new taxonomy with regards to, for example, blue finance, which looks into the ocean specifically, etc. And then, of course, given the current challenges of food security, there are also a lot of discussions about sustainable agriculture. So we need also more issuances targeting these specific issues when it comes to green sukuk issuance. In some of the issuers have adopted broader frameworks that not only look at the green aspect, but the broader sustainability aspect, simply because some of the factors could address, or some of the projects could address both social as well as environmental objectives. So let's say if you talk about access to clean energy, that is obviously under environmental, but it has also social implications, because if you're targeting, let's say, some of the remote areas where access to energy in general is still very low, then you're also achieving the objectives of addressing energy poverty, which is a social objective. And you can do the same analysis for a variety of other environmental objectives. So that's why talking about maybe sustainable sukuk or sustainability-linked sukuk would make more sense. So these are some of the developments, and I think with the growth of the sustainability awareness globally, and also the ambitious targets that various countries have under the SDG agenda and also the Paris Agreement, we could see more and more of these initiatives, not only coming from the sovereigns, but also coming from the, let's say, the private sector. We have seen some initiatives already in, let's say, in Malaysia, with corporates issuing green sukuk, and we would love to see the same in other emerging markets.
Mm-hmm. And so far, we've been discussing Islamic finance and sustainability, ESG, but we haven't focused on fintech specifically. No? I mean, we discussed Islamic finance and banking in general. So I wanted to ask you now about fintech more specifically, because I know you are an expert on fintech as well. You are board director at the Global Impact FinTech Forum, and you have published on fintech a lot as well. So this is why I wanted to ask you, like, more specifically now, what role do you think that both fintech in general and Islamic fintech can have in the future of the wider ESG ecosystem, and not just finance in general, but fintech in this case?
Okay. Yeah, definitely. I mean, two trends that are currently shaping the financial industries, as you say, there's fintech and there's also sustainability. So sometimes we talk about them as separate trends impacting differently the financial industry, but it's actually, there are a lot of synergies between both, and fintech could be a good enabler for sustainability, and that's what we're trying to achieve through GIFT, for example, that we recently established the Qatar chapter, which will be focusing on the MENA. And one of its key focus areas is specifically to promote this synergy between fintech and sustainability. So we're focusing on digital sustainable finance. And the idea is, how can we use fintech as an enabler for sustainability? Now, if we look at the key technologies and just like building on the discussion we had earlier about the two key aspects or features when we talk about sustainable finance, which is transparency and impact assessment. So that requires a lot of data collection and analysis because you want to also assess your contribution when it comes to environmental and social impact. Now we have ESG scores, for example, for companies or financial institutions that help the investors assess the, for example, the contribution of these institutions to sustainability. And these scores are now provided by a number of, for example, data providers or financial analysis platforms, etc. But you can also expand the same analysis to all the activities if we're talking specifically about financial institutions. Let's say you want to integrate ESG factors in your credit analysis process, and that will enable you to assess, for example, the ESG performance of your customers when they to decide on their eligibility for bank financing or not. So for that, you need information with regards to their ESG performance. So this is where fintech can play a critical role because developing this expertise in-house could be challenging for some of the financial institutions for their size, the expertise they need to develop, cost-wise, etc. And some of the fintechs are actually providing this expertise, and they help institutions provide, for example, assess the ESG performance of some transactions or some counterparties, but also they help them report on sustainability. Now, most of the institutions have what we call sustainability reporting, and the trend moving forward is to have what we call an integrated reporting where financial information is presented alongside, sustainability information, typically the social and environmental impact of institutions. So some of the technologies that could support in this regard is, for example, AI and machine learning, which facilitates the analysis and the identification, let's say, of potential, let's say, money laundering activities. We're also talking about cloud technology, which helps handle large amounts of data in a cost-effective and secure way. You have big data and real-time analytics, which facilitate data processing and decision-making. And they're also now talking about also, augmented and virtual reality. There's also blockchain, which helps achieve, or mitigate the issue of traceability when it comes to the use of proceeds, etc. So aligning all of these and using technology actually to better integrate and report on sustainability could scale up as well sustainable finance. And that's why we see more and more synergies between both when we're talking about, let's say, value-based banking or impact investing, etc. So a key enabler for this could be the technology, and that is through fintech innovations to promote actually transparency and impact assessment.
That's a very interesting explanation of how Islamic FinTech can be leveraged for ESG. And now leaving sustainability aside, I wanted to ask you about, in a few minutes before wrapping up this episode, about Islamic FinTech in general. What do you think this industry of Islamic FinTech looks like now, and what do you think it will look like in the near future in general, not just focusing on sustainability?
Okay. So I would use the same categorization when it comes to the key segments in the industry, looking into innovations across all segments. So definitely we've seen a lot of innovation when it comes to payments. So now in many countries we have like mobile wallets, mobile payments, etc. So that is quite advanced, and I would say it reached the maturity stage in many countries. However, some of the segments are still very underdeveloped. Typically, I mentioned earlier, Islamic social finance. This is where we potentially need most of the innovation. For example, more blockchain-based solutions. One of the key challenges in these segments is the efficiency of the use of the funds. So these are large, for example, sources of financing. For example, if we're talking specifically about the zakat and awqaf segments, but their effectiveness is very limited sometimes because of the inability to have a clear impact assessment of how these funds are being allocated and used. So if we use technology in this regard, typically looking into blockchain technology, then that could help scale up or promote or strengthen maybe the efficiency of these institutions. You're talking about the sukuk market as well. We've seen, for example, use of smart contracts when it comes to sukuk issuance, but it's still very limited. I think there's only one initiative in Indonesia so far, but the potential is that if we have more and more issuers, both sovereign and corporate, looking into also smart sukuk when it comes to financing utilization, and why not also targeting the retail, using, for example, smart retail sukuk. And that is to have a wider impact, but also to target a wider investor base, including retail investors. And in the banking segment, there is a lot of potential. For example, with some solutions that address some of the key challenges of underdeveloped segments, like if we talk about trade finance, to streamline the trade finance process. One of the large segments that have these challenges with regards to access to finance is SMEs, and AI in this regard can help promote, for example, decision making when it comes to credit decisions at a lower cost, or even using, for example, some of the strategies to assess the credit worthiness of SMEs when it comes to access to finance. We have seen also some green products, green banking products that use, for example, when it comes to green car financing or mortgage financing, insurance solutions that can use, are based on, for example, artificial intelligence, and that is to assess sustainable environmental challenges, etc. So there is potential across all segments, definitely, but that also depends on the prevailing infrastructure in each country. So we've seen a lot of countries promoting, for example, incubation programs for all of these fintechs to support, to promote synergies, let's say, with the financial industry, and also coming up with all of these solutions and implementing them. In some countries, it is still underdeveloped. So, for example, talking specifically about Qatar, where I'm based, we have a number of institutions providing that framework to scale up some of the innovative solutions, and that is to support the financial industry through, for example, the Qatar Development Bank, Qatar Financial Center, etc. And the future is actually to focus on the underdeveloped segments beyond the payments, but to also look at solutions across the capital markets and Islamic social finance.
Mm-hmm. Well, thank you very much for sharing all this, Dr. Dalal. Unfortunately, we are running out of time, which means that we'll need to wrap up this episode. But I'm sure that my listeners, same as myself, will have learned a lot listening to you, talking about Islamic finance, sustainable finance, Islamic sustainable finance, Islamic FinTech, the current trends. It's been a very informative and interesting episode. So for that, I would like to thank you once again for coming to my episode and sharing all these ideas.
Thank you, Dr. Oriol, and looking forward to more opportunities in the future.
Thank you very much. Looking forward to that too. And well, to all my listeners, thank you very much for listening to this episode. And please stay tuned for the next ones. Thank you and see you soon.